More about what's happening. We have Shane Oliver joining in. Shane, hi. Thank you very much for taking the time out. Well, it doesn't seem to be a normal Friday today. Your sense in terms of how the Indian markets and other markets should react to the news?
Well, we've seen an initial reaction that markets have come off a little bit in response to this news because it does add to uncertainty, I guess. The Australian share market, which had already been open at the time, was up about 0.5% and is now flat to down slightly. So there's certainly been an impact there, and you can see a turnaround in the US futures market as well. But I think if you look at the history of these sorts of events, and there has been lots of these things in the past, you see this negative short-term reaction. I don't think it's going to signal an escalation of US involvement in the war in Syria. I think it's just a targeted reaction to the chemical attack. And therefore, I think history would tell us this impact's going to be short-lived for investment markets. We've seen lots of these things in the past. They cause a lot of excitement in markets at the time the news breaks. But once investors realise that the fundamentals aren't going to change dramatically, you might see a bit of a boost to defence companies. But beyond that, I think the impact will be short-lived.
Well, Shane, one of the questions is that, you're saying that there would be some sort of volatility in the short term with regards to this news. But going forward, the long term is also unpredictable, right? Considering that the promised tax reforms haven't yet come by. So what exactly is the way ahead for markets in the world, as well as emerging markets in a situation like this then?
Well, I guess the long term's always unpredictable. You always have these uncertainties as to whether something will happen or not. I mean, no one knows for sure about anything. But history tells us that we usually sort of muddle through, that the world economy will probably continue to grow. I think there's a lot of focus, yes, on what Donald Trump will get through in terms of his tax reforms. But I think at the end of the day, the real reason why share markets in the advanced countries, in the emerging world, why they've rallied since the lows of February last year is because the global economy has proved to be a lot stronger. That's the real reason we've had this rally. Profits were falling a year ago globally. Now they're rising again. We've still got an environment of very stimulatory monetary policy around the world. It's only the US, after all, that's really tightening. So that environment is still a positive one for markets. So yes, there is uncertainty about what Donald Trump might do and get through Congress. But I think at the end of the day, as long as he doesn't do any major harm, doesn't get into a trade war with China, for example, then I think it will turn out okay. But that said, I mean, share markets are vulnerable here. We've had a huge rally in markets over the last 12 months. So far this year, most markets are up. So yes, we could have a correction, but I would see it as just that. I think the broad trend in markets, taking a 12-month view, including for the Indian share market, will be upwards.
Okay. Well, I think we have a reaction coming in on the dollar won as well. That one is spiked up in terms of an depreciation of 0.7%. So maybe we can pull that up. Shane, have you managed to have a look at the currencies, and what kind of trade would you possibly initiate within the currency space on account of this news? Would it just be dollar buying?
Actually, I think it's already happened. That'd be my view, that it's probably too late to jump in there and do something. I mean, normally when you've got uncertainty, you buy gold or you buy the safe havens, which in the US dollar tends to be a safe haven, or the Japanese yen. Always a bit hard to explain why that's the case, but they're usually the safe havens. But I think the problem is that by the time you put your trade through, it might all be over, and markets will have moved on to the next thing. That's why. But if this is the start of World War III, then it's a different story. But I very much doubt that it's the start of World War III. I think it's just a reaction. Something was done which was bad for humanity, and arguably there had to be a response to that, and that's what we've seen. But markets will move on beyond this, and if you start buying gold or something right now, you're probably buying it at the wrong time.
All right, Shane, thanks a lot for stopping by and giving us all the